Hey, y'all, welcome to another episode of Forward Guidance. As you know, I've been looking a little bit into AI, artificial intelligence, obviously focusing on the bank and the Federal Reserve. I have spent absolutely 0% looking into crypto at all, and I've been missing out on a lot. And apparently, Coinbase just got sued by the SEC, a pretty big deal. So I don't know what I'm talking about at all, but I'm joined by someone who does. Casey Wagner, senior policy reporter at Blockworks. Casey, great to finally get you on the show.
I know. Thank you for having me. It's been a really busy news week, so excited to talk about some of this stuff.
Yeah, me too. Start us off. So Coinbase did get sued, right?
Coinbase did get sued. Binance also was sued on Monday.
Oh my God. I totally forgot. Okay, so Binance got sued on Monday, and then Coinbase got sued on Wednesday. Binance, an offshore non-US exchange, a lot of rumors being Coinbase seen within the crypto world as a somewhat legitimate thing. It has a stock that's publicly traded, and the CEO, Ryan Armstrong, he does like to wear a tie. So what did Binance get sued for, and then what did Coinbase get sued for?
Yeah, well let's start with Binance. The Binance charges are more severe, definitely. There are allegations of commingling client assets with a trading arm, which, if anyone listening is familiar with FTX, is very similar to the charges that FTX is facing. So like you mentioned, Binance is an offshore exchange. They're not based in the US. They do have a US arm, Binance US. Both of those entities were named in the lawsuit in addition to their trading operations. Binance has since denied that it has done any commingling of client assets, that it has used any sort of client deposits to make trades with third-party entities. But again, that's what the SEC is saying. And we tend to know that these charges don't generally come forward unless there's pretty decent evidence. So we'll have to wait and see, how the actual argument and what their defense looks like as it comes out. Generally speaking, that was the big hitter against Binance. Binance was also targeted for operating an unregistered securities broker and exchange, and for facilitating the trading of various assets that the SEC claims are securities. These include Binance's own BNB token, Binance's stablecoin BUSD, which a lot of exchanges have already delisted anyway. But the SEC also mentioned a few unrelated crypto assets like Solana. Polygon's Matic token was also listed. So they're really targeting a lot of assets and basically claiming that not only do they have jurisdiction over these, but Binance is violating US security laws by engaging with them.
All right. So if Binance is commingling user funds as it is being accused by the SEC, that is a big deal and seriously shady. And then there's the securities allegations, which is broader and not necessarily as dastardly as as commingling funds. I mean, that's illegal and very immoral, and it's just a sign of like any financial criminal, really. Whereas security thing is a little perhaps more less black and white, more gray. What was Coinbase accused of today by the SEC? Why was it sued? And were you surprised that it was sued?
Yeah, so Coinbase was actually served a Wells notice months ago. Coinbase came forward and said that the SEC had reached out to them with a Wells notice, which is basically the SEC informing an entity that enforcement actions will be coming. So Coinbase should not have been surprised. The general crypto community, anyone who's been following Coinbase and their various legal situations with the SEC, should not have been terribly surprised. The SEC's case against Coinbase basically is that they're operating as an unregistered broker. They have facilitated the trading of unregistered securities. And also the services that Coinbase is offering, mostly their wallet and staking services, are classified as securities and therefore are unregistered securities. So we have accusations that Coinbase is issuing unregistered securities and also that they're facilitating the trading of unregistered securities. Just like in the Binance lawsuit, the SEC did name additional tokens that are securities that are traded on the Coinbase platform. Again, these include Solana, Cardano. There's like 12 total.
Can you just explain briefly why is it so important whether something is a security or is it not? And who does it give power to if it is a security?
Yeah, so I mean, the SEC's argument really forever, but especially since Gensler came into power, has been most crypto assets are securities. If you are issuing a security that is traded in the United States, that's available to US citizens, you have to register with the SEC. You have to go to them, explain, why your investment vehicle is safe for consumers, why it should be allowed to be traded publicly in markets. We see this all the time when companies go public. Coinbase went public via direct listing. They had to go through a very extensive process with the SEC explaining their business model, why they are operating safely and soundly, and why US citizens should have access to investing in their company. So that's really the gist that the SEC is getting at. They think that most crypto assets operate under investment contracts where the investor has reasonable expectation for profit, and that should be a security. The issue with kind of tackling that token classification piece in these lawsuits against specific exchanges is the SEC is not suing Solana for offering and for issuing what they would say is an unregistered security. They're targeting Coinbase and Binance for facilitating the trading of it. So it gets a little murky there. And a lot of the discussion in the past couple of days as this has come out has been, if the SEC had clearer guidelines and if Congress created a better framework labeling what securities should be and how tokens should be classified, then we wouldn't have these cases of regulation by enforcement where the SEC is stepping in, suing two exchanges, and then, unilaterally looping in all of these other token issuers and projects.
Got it. And so when you interview a lot of people in crypto as well as, media people in crypto, I think from reading your work and hearing what they say, a lot of people say that what they want is clarity. The SEC needs to give us regulatory clarity. So you hear that word clarity probably 10 times a day. And the refrain, I think, from SEC Chair Gensler, who you mentioned, is that we have clarity. These companies are not playing by the rules. Could you just flesh out the arguments on both sides of the issue, please?
Yeah, definitely. So Gensler is kind of famous for saying, come in and register. Gensler, for years, has said that the US has very clear laws and regulations. The process for registering as a broker exchange, a broker dealer, the process for registering as a security issuer is very clear. It has not changed for many, many, many decades. The issue that the crypto industry has brought up, specifically Coinbase, is that they say they've attempted to register. Coinbase applied to register as a broker-dealer, I believe in 2022. They said that they have had upwards of 30 conversations with the SEC. They've submitted what they believe to be all of the relevant information. They've tried to kind of work with the SEC and how they could get this registration. And they've never received any sort of feedback on why they're never approved. Robinhood actually has said something very similar. So Robinhood does have a broker-dealer registration where you can go and buy normal stocks. On the other side of that, Robinhood has their crypto platform, which operates as a crypto exchange. They don't offer very many crypto assets, a lot less than Coinbase or Binance or Kraken or any other major crypto exchange, but they do have this separate entity. Robinhood has said that they have tried to get Robinhood crypto registered as a broker-dealer. They said that they were in conversation with the SEC and their staff for 16 months, and then they were denied. So a lot of the criticism from the crypto industry is that they're attempting to fit into the existing regulations. They're attempting to go in and register and meet these requirements that, like I said, have been established for decades and decades. But the SEC is either not letting them or also potentially not giving them enough reason why they're denied. And, they're not saying, well, if you did X, Y, and Z, we could approve you. They're just not getting a lot of feedback. The dialogue is not really there.
And has the SEC or Gensler said anything about why they have denied them? Have they acknowledged the application?
Yeah, Coinbase specifically. So the SEC does come forward and say, we haven't accepted Coinbase. They don't get publicly, at least, super in the weeds about why. The overarching message from Gensler has always been consumer protection. And so denying any of these applications to become broker dealers or denying any of the applications from token issuers to have their their crypto security registered, they've all been denied because they don't meet the SEC standard for something that's safe and, promotes responsible investing.
Got it. And how bad will this be for Coinbase? I noticed that the stock, opened down a lot today, but actually rose throughout the day, intraday, even though it's still down something like 11% roughly. How much is it a fine that they're going to have to pay? Is it just they could be shut down? How severe will this be for Coinbase?
Yeah, it's really up in the air right now. Like you mentioned, there were a lot of dip buyers today. Coinbase's stock has not historically performed great. I think it's down like 80% since its direct listing. Yep. Although year to date, I think it's up 70 something percent. It's had a really strong start to 2023 after a very negative couple of years since going public. In terms of what could happen to Coinbase, we might see a settlement. The SEC has settled with several crypto exchanges and issuers over the years for relatively similar issues. Kraken exchange was recently sued because the SEC said that their Earn product, which facilitates leverage trading and earning rewards on staked crypto. The SEC said that was a security. Kraken settled with the SEC. They paid a fine. They've stopped offering that service, and they've continued to operate as an exchange, more or less the same. Settlements are definitely faster. They're cheaper. Ripple has been in the weeds with the SEC for its XRP token for over 2 years. The CEO of Ripple recently said that they've spent $200 million fighting that. So not only is it expensive, it's extremely time consuming. Coinbase has come forward since the lawsuit was announced and denied these allegations. They've said that they have worked with the SEC for years. The CEO, Brian Armstrong, pointed out that Coinbase is publicly traded, and they went through a very extensive process with the SEC, like I said, covering their business model, going over why it's a sound practice. They have not come forward and said anything specific about being willing or unwilling to settle. Again, it's very early. These charges were announced today. And again, in terms of the stock, like I said, the Wells notice has been out for months. So people have definitely been expecting some sort of legal action. The Wells notice mentioned specifically Coinbase's wallet and Earn product. So, seeing those targeted today is really not terribly surprising. It just depends on, do investors think that Coinbase has a shot at winning this if they fight it, which, like we saw with Ripple, it could take years.
Sorry to interrupt. Wanted to let you know about Blockworks' upcoming crypto event, Permissionless 2. This ultimate DeFi gathering will be taking place in Austin on the 11th to the 13th of September 2023. It will feature the very best discussions on ZK tech, rollups, account abstraction, MEV, and much, much more. All the big hitters in crypto are going to be there, so if you're into crypto, you need to be there too. To get a 20% discount to a full 3-day pass to Permissionless 2, click the link in the description and use code GUIDANCE20. That's GUIDANCE20. Thanks. Let's get back to the episode. Yeah, this may not happen, but if Coinbase is shut down, not just the stock, but people who own crypto at Coinbase, they're going to have to get it back, right? Somehow.
Yeah, there's been a lot of. It's funny, Coinbase. There was a rumor for a little while that Coinbase was the safest exchange because they had some sort of FDIC insurance. This is not true. So any crypto that you have in Coinbase, and Coinbase admits this, is not federally insured in any way. There have been a few exchanges that have come forward and tried to make similar claims that while they're not FDIC insured, maybe their partner bank where they keep user deposits is. So there's been a lot of cases of crypto exchanges trying to, reassure customers and tell them that there is some sort of federal insurance protecting their assets and their deposits in the event of a run or a bankruptcy. We haven't actually seen that play out in practice. So I'm curious what would actually happen to consumer funds in Coinbase's case with their USDC token stablecoin. They publicly say that their reserves are completely matched, 1-for-1. Presumably, those assets would be okay. But again, in the event of a bankruptcy, maybe if they continue to fight this and it turns into a very expensive battle that leads to them not being able to operate anymore, it's really up in the air what would happen to consumer assets.
Yeah. Wow. So FDIC,
at the very least, they would be frozen for a very long time while bankruptcy courts determined how to pay back creditors.
Wow. Yeah. So FDIC minimum, maximum insurance up to $250,000, and then there's actually, I think, SIPC insurance, Securities and Investor Protection Corporation. The S stands for the word securities. Interesting. That if you have it on E-Trade or Investor, you have securities that those can be insured, even though it's not a bank. But Coinbase sounds like they have neither SIPC nor FDIC. So if I'm not comparing Coinbase to FTX, totally different bag of worms, but if Coinbase goes down because of it's shut down by the SEC, would people who own Bitcoin on Coinbase, would they be an unsecured creditor to Coinbase in the same way that people were to FTX? I
would imagine, yeah, that's the case. I mean, Voyager, they're bankrupt. Anyone who had assets on that platform are creditors, uninsured creditors. Yeah.
Wow. I mean, what do you think is going to happen? Obviously, no one has a crystal ball, but you've been following this really closely.
I mean, Coinbase has been very vocal about their dissatisfaction with the current regulatory environment in the U.S. There was actually a hearing today in the House Agriculture Committee where Coinbase's chief legal officer was speaking. Certainly a busy day for him. Brian Armstrong at Coinbase has really been very vocal about his disappointment in the SEC's willingness, he says, to converse with them and to have open dialogue. This sentiment has been echoed by other crypto exchanges and companies that have been targeted by the SEC. They say that there just isn't a tolerance at the SEC right now to productively engage in any sort of conversation that would result in regulation in a tangible way instead of this regulation by enforcement pattern that we've been seeing for the last couple of years. It's really ramped up this year and last year. So, I think that Coinbase has fight in them. I see them wanting to take this to court and, attempt for a real win. A settlement often means some sort of, admission that they were in the wrong. A settlement usually means that they agree to stop offering these products that the SEC says are securities. So their wallet product, their Coinbase Prime Brokerage arm, Coinbase Lend, Earn, all of those products would presumably have to be shut down in the event of a settlement. And we've really seen in the last few quarters and Coinbase's financial statements, they're trying to diversify away from just trading revenue. So wallet, Lend, Earn, Coinbase Prime, these are all really essential to their long-term revenue goals.
Yes. And, I having looked at it a little bit, you having looked at, Coinbase earnings reports a lot, those diversifications, they are different business models, but they are fundamentally correlated to crypto. Like when the price of Bitcoin goes down, obviously trading revenue goes down, but so does Earn as well. And you and I've noted that their other revenue or other diversified revenue streams went up, but a lot of that actually was because interest rates went up. So it's because of Jay Powell.
Exactly. When you're holding certain assets in this current interest rate environment, you're going to make a lot of money. And we've seen that with Coinbase. So yeah, I mean, it's been an ongoing struggle with them for, I would say, over a year to try to get away from this transaction fee revenue, which obviously also suffers in a bear market when less people are trading and interested in getting involved in the space.
Right. And do you think that the SEC, Gary Gensler, have a specific strategy to try and label these crypto assets, most crypto assets, as securities. In other words, it's less about it's not just about Coinbase itself. It's also about establishing the precedent that these things are securities.
Yeah, definitely. I mean, we don't have a ton of visibility into the SEC's agenda, but we can only go off of what commissioners have said and what Chair Gensler has said. Gensler's been pretty clear. He's said multiple times very publicly that most crypto assets, he discludes Bitcoin and sometimes Ethereum. Ethereum's status is a little bit up in the air with the SEC, but generally speaking, he says that everything besides Bitcoin should be labeled a security. We know from certain commissioners, Commissioner Peirce, she's kind of known in the crypto world as being much more friendly to the asset class than Gensler has been. She's said that Gensler's agenda is extremely ambitious. He's moving really quickly. There's a lot of enforcement actions that we've seen already. There's probably a lot that we can expect down the line this year. And really getting this token classification issue nailed down seems to be a priority. On the other hand, we're not seeing substantial policy from Congress and guidance from Congress to give the SEC or the CFTC, further instruction on how to approach this asset class. The SEC is basing everything off of the Howey test. They're basing it off of securities laws that are very dated. And that's a big criticism from the crypto industry as well, is that they're not looking at this asset class as something new that potentially might need a different set of guidelines and processes in terms of classification. Again, when we're seeing the SEC label certain tokens in these lawsuits that are really unrelated. So when we see the SEC label Solana as a security in a Binance and a Coinbase lawsuit, it's alarming to the industry to kind of see how far this regulation by enforcement system is willing to go. We could potentially see the SEC target these issuers individually. We could see a lawsuit against Solana, just like we saw a lawsuit against Ripple and XRP. My personal opinion is that if the SEC had a strong enough case, we would have seen that.
Very interesting. Yeah. So that Howey test, which you referenced it just now and earlier, is sort of 4 rough criteria. Number 1, an investment of money. Number 2, in a common enterprise with the expectation of profit to be derived from the efforts of others. So that is a security. Could you just walk through the case of how the SEC would say that about Solana or Cardano or some other crypto asset? Anyone, pick one. How do they say that it's, to be derived from the efforts of others? I mean, that's really what it hinges on, right? The last one.
Yeah, definitely. So yeah, we can focus on Solana. In the Coinbase lawsuit and also in the Binance lawsuit, we saw a pretty short summary of the SEC's argument on why Solana and other tokens should be considered securities. The Solana argument specifically really focused on this expectation of profit. They've said that Solana has invested in marketing the Sol token, and therefore that gives potential investors a reasonable expectation of profit. They mentioned Solana's podcast and their YouTube channel. They've also mentioned what they called deflationary mechanisms. So having a cap on tokens that could be issued is a deflationary mechanism in the SEC's view, and therefore helps it be classified as a security. It creates this expectation of profit, that there's value in something that has a limited supply. So we're really seeing a lot of that argument for sure from the SEC.
Got it. Well, Casey, it's been great getting you on. I just want to return to the Binance thing because, the US, Coinbase is the big story, but Binance, I mean, it's just a mammoth in crypto trading. I mean, is it what, 85, 90% of trading is on Binance? So is this action against Binance, is it just against Binance US or against all of Binance?
It's against all of Binance. So Binance US was listed. Their trading arm was also listed. CZ, Binance's head, has come forward and said that they are having discussions around a settlement. So curious what that might look like. But again, anytime you make a deal with the SEC, it's very likely that you would see some sort of limitation in offering the products going forward. For example, Kraken, they settled and they no longer offer that product.
Got it. Well,
and I'm curious if Binance is interested in that kind of settlement.
And do you think the case against Binance has legs beyond the US? Because if it does, I mean, that's literally 90% of the market of crypto.
You mean other jurisdictions going after Binance as well?
Yeah.
Yeah, I mean, I think that we could definitely see that. We've already seen individual states bring up charges and complaints against Binance just within the US. So, seeing similar actions, in the EU or the UK is very plausible. There's a lot of similar discussion going on around the world about token classification specifically, and the legality of these types of operations.
Got it. Well, Casey, thanks so much and briefing me and the Forward Guidance audience. People can find you on Twitter at Casey Wagner with 2 R's at the end. And of course, all the great journalism from you and the Blockworks editorial team at blockworks.co. And we can link a few links in the description to your coverage of this. Casey, thanks so much. And thanks everyone for watching.
Thanks for having me.
Forward Guidance, the program you just enjoyed, hopefully, can be viewed on YouTube at Blockworks Macro or heard as a podcast on Apple Podcast and Spotify. Episodes are typically released on Apple and Spotify a few hours before they air on YouTube. Please leave a review on Apple Podcast if you feel so inclined. Also, you can get 10% off to Permissionless 2023 and Blockworks Research using code GUIDANCE10. Thanks again and be well.